because that would show that there is a pure decline in the bread and butter business of Dr. Reddy's. We have Sarabjit Kour, Nangra of Angel Broking, joining in to talk about that as well. Sarabjit, hi, thanks very much for joining in. Also, before we get to her, just want to point out that the India business is up only around 10% this quarter versus expectations of 14 to 15%. So the fear of the India business actually not doing well because of the FTC, the NLEM seems to be coming true now. So that too would be another fear factor to watch out for. Emerging markets down 26%, Europe down 16%. Emerging markets, I assume, includes the Venezuela as well as the Russian business. Sarabjit, over to you then. Disappointing quarter?
Very much disappointing actually in terms of all fronts if I have to see, but mainly I think the main disappointment is on the top line. We were expecting a moderate numbers on the top line any which ways, but it's a significant dip, and especially it's coming on the back of all the geographies doing very poorly.
Okay.
And,
Okay. We also, the reason why we've seen that decline come through in the EBITDA is because of the SG&A expenses, which have risen 12% year on year to around 1,230 odd crores. This increase is largely due to the ongoing remediation measures, launch-related activities for approved NDAs by PP, and certain routine items related to manpower and other spends. So that's one of the reasons why you've seen that EBITDA disappointment which has come in, and the R&D disappointment. How would you look at the top line growth, Sarabjit? I assume that would be one of the key disappointments this time.
Yeah, that's what I said. More than internals, I guess. I don't see much disturbing trend in the internals, but more so, except for R&D, I guess, which is also moderate Y on Y. If I look at percentage to sales, it will appear higher because the sales are lower, but Y on Y it's 9%, which is decent. So overall, I don't find any disturbing trend in the numbers at all, except for the top line. So I guess that's the main concern in these numbers actually.
Okay, the stock is now down 2.5%, and keep in mind it's seen a huge rally from the recent lows, but there's a bit of a reality check now coming in. Meeta Shetty of Kotak is also with us. Meeta, good afternoon. So your first thoughts on the margin miss, the overall numbers, and your call on the stock?
Hi, good afternoon. So definitely numbers are pretty bad. Top line is coming lower than expected. So we were looking at somewhere close to 36 billion, and it's coming at 32. So definitely a miss there. Key thing to remember here is US, which is roughly about at 232, which is this quarter, is sharply down. And this is the first quarter where, we are going to see impact of Vizada as well as Wellsite competition. And more so with Vizada because the launches have happened towards the end of last quarter. So coming quarters will be even more difficult for Reddy's, as we are not factoring in any good launches to come in, but competition is definitely going to increase. So bad numbers on the top line itself. So and plus the one-offs and certain things have obviously disappointed to a large extent.
Okay. Just wanted to touch upon the fact that you mentioned $232 million was the US business in dollar terms?
Roughly, that's what the number we got.
Okay, that would be a significant disappointment versus the expectations of at least around $270 million. Meeta, so how would you approach, future earnings for Dr. Reddy's now? Because barring the margins, like you mentioned, top line seems to be a bit uncertain. Where is growth coming from?
So definitely, as I said, that coming quarters, especially second quarter, third quarter, should see some more impact on the competition side for US and India. It's also going to be a bit difficult because we know that Dr. Reddy's already indicated in their Form 20 that the impact from the bans which are coming in and the NLEM impact will impact the domestic growth overall. So US, which is about 50%, domestic, which is about 12%. So both these segments will not be doing that great. Emerging markets is anyways a difficult, in a difficult scenario right now because of the currencies. So we believe it's going to be a difficult year for the company overall.
Oh yes, difficult year for sure. The management's commentary is very, very cautious. They say decline in North America is due to increased competition and pricing pressure that they're facing. Decline in markets like Russia is due to the depreciation of the ruble. So it's some problem or the other that has hit most markets. Revenues from rest of the world has declined 53% because of no sales from Venezuela. So it's a cocktail of bad news for Dr. Reddy's that has hit its earnings this time. So Meeta, what about the stock? Because the stock has seen an unwarranted run up over the last 5-6 months. At this price, what kind of downside do you see on the stock, and what's your target?
So obviously, I mean, we are not very positive on the stock. Firstly, the run-up had happened because there were indications from the management of inviting the US FDA somewhere in July, and probably towards the end of this calendar year, we could have probably seen some sort of resolutions coming in. But my sense is that in spite of that, we're not going to see any big-ticket launches coming in from US. So yes, sentimentally, it's a big positive if the plans get cleared out in the next 6 to 8 months. But net in revenues, will it slow down? I have my doubts on that.
Okay, so you don't think that that the approval or the remediation progress would be enough of a trigger for Dr. Reddy's to recover to the levels of the pre-warning letter time in November of 2015? It would depend on where growth is coming from as well.
Yes, absolutely, because the pipeline is because all the large ones which we are talking about, Copexon, Eloxy, Angiomax, these are all lined up post 2017-18, and even the Teva deal, which gets about 8 drugs to their portfolio, out of which only 1 is approved, 7 are pending. That also would start showing up in numbers only by FY19.
Okay,
to a notable numbers. So we're not seeing anything great coming in the next 1 year.
Yes, the stock is down, in fact, 3% right now. And if you were to add yesterday's weakness as well, there's quite a bit of weakness in the last 2 or 3 days. Meeta, what is the risk of the stock going back to not the previous lows, but at least sub 3,000 levels?
Well, we'll have to work on that and we'll comment.
Okay, just one quick question for Sarabjit. Sarabjit, after what we've seen for the America business for Dr. Reddy's, are you becoming cautious about other companies as well, simply because of the pricing pressure that a lot of the companies might be facing?
See, we have been cautious about America business for most of the companies any which way. So we have been only looking after companies which have strong pipelines and have robust A&D and market share. So we have been cautious on pharma with respect to US FDA and many other things. That's why we are, whenever the stocks move up beyond a particular profitability level, which I think pharma companies will find it difficult to manage on a sustainable basis, we tend to be neutral or seller on those stocks. So it's only when they crack because of some bad events that we tend to look at them. So caution is the word for pharma any which ways, because these companies are become larger and generic penetration is also improved in US. So obviously these dynamics will play out for some time before. But there will be companies who will be into niche areas. So you will have to look at various factors, but then nonetheless the trend will be obviously, stick to large cap companies with good pipelines and diversified portfolios.
Sure. All right, ladies, Sarabjit, Meeta, Ekta, thank you so much for joining us and discussing Dr. Reddy's numbers. So that's a big casualty in the pharma space. Dr. Reddy's, the revenues are down 14% across geographies. It's been a disappointment. By the way, the market also is losing some of its sheen right now.